We've said in a lot of our previous videos how Bitcoin is the most popular and most reliable cryptocurrency there is. But how come it's been crashing lately? Come and sit with us in this conversation as we talk about why Bitcoin is crashing. Stay tuned. Hi everyone, welcome to Crypto Intel. In this video, we'll talk about how the then overperforming Bitcoin suddenly dropped its value. Before we go any further, don't forget to hit like, subscribe, and notify to get more updates from our channel and become more intelligent about the crypto world. The world's most famous cryptocurrency, Bitcoin, has dropped as low as $33,000 on January 24 this year. So that's more than 20%. This is sad because just over 2 months ago, Bitcoin hit its all-time high of nearly $69,000 on November 8, 2021. What happened here? First, let's recall the fact that Bitcoin is a risk asset. Risk assets are investments that experience a significant amount of volatility in the usual course of the market. Things like stocks, commodities, high-yield bonds, currencies, and of course Bitcoin are all considered risk assets, because you can expect their prices to move up and down frequently under almost any market conditions. This is happening because market narratives have shifted from risk on to risk off. Liquidity dries up as the Fed and other central banks start to taper excess stimulus, and also as regular folks start to realize that COVID-19 is winding down. People are going back to regular work setup, which affects how NFTs are bought, moving into the metaverse tomorrow. Bear markets are not a new occurrence for experienced Bitcoin traders. Actually, the price of Bitcoin fell more than 80% in the 2017 to 2018 period. However, this happened before major corporations like Fidelity and PayPal invested billions to get into the crypto game, and also before armies of everyday investors entered the fray. Fledgling crypto owners should be getting acquainted with how much gumption is required to stick with Bitcoin over time. Another factor why Bitcoin is crashing is how this cryptocurrency had a rough start to 2022. Despite its late 2021 pullback from its all-time highs, Bitcoin ended the year up nearly 70%. That's a fantastic return for any asset class, let alone one without any tangible value or the full faith and credit of a national economy behind it. However, a 70% annual return represents something of a come down for Bitcoin after gaining more than 300% in the lockdown-ravaged year of 2020. In 2022, investors are in a risk-off mood. Collectively, investors have shown more interest in value-based investments and less in speculative stocks and alternative store-of-value investments. Federal Reserve is one of the reasons why this is happening, as they are planning to raise interest rates this year to combat levels of inflation unseen in the US for 4 decades. Just how many hikes remains unclear, but conventional wisdom pegs the number at 4 rate increases, which would move short-term market interest rates higher by a percentage point by the end of 2022. As Feds raise the interest rates, it affects the demands for growth companies such as tech stocks and speculative risk assets like Bitcoin itself. The Fed will most likely its pending campaign of rate hikes for the better part of a year. Not only is the Consumer Price Index up 7% over the past 12 months, but the Core Personal Consumption Expenditures Price Index, the Fed's preferred inflation gauge, is up almost 4.7%, well above the Fed's 2% target. It's still a question how much demand for crypto will remain with all the liquidity drying up. It tends to be difficult for investors if we enter a sustained period when central banks actively drain liquidity, and riskier assets tend to underperform safer ones. So we have no historical precedent for how Bitcoin and other cryptos might act. Third reason is something we've been saying over and over in our previous videos. Bitcoin is volatile by nature. Geopolitical concerns like the tensions with Russia over its military buildup around Ukraine are driving market volatility in many tradable asset classes, and Bitcoin has proven to be somewhat correlated to broad market movements and less of a direct hedge against equity markets. The trouble is that Bitcoin hasn't proven itself to be much of a hedge against anything. You'd expect a currency that purports to maintain its buying power and be independent of any central bank to gain more followers with an inflation happening at 4-decade highs. Bitcoin appears to find adherents when the price is rising and produce doubters when sellers dominate. Like a risk asset, it's about the 8th time this happened since 2009. Bitcoin has experienced a 50% drop from a prior all-time high. You don't need to look far back in time to find the last big sell-off. Bitcoin fell below 30,000 in July 2021 after China cracked down on the mining of digital currencies. So if you're going to be too emotional over a decline of at least 50%, you shouldn't be in Bitcoin, as this kind of drop is totally normal. It's almost the price of admission. After all of these things have been said, should we still own Bitcoin? We're not going to say yes or no, but we'll rather lay out certain situations to you, and that's for you to decide. Buying Bitcoin used to be designed for tech-savvy first adopters, and a genre of journalism briefly rose into existence to explain to perplexed readers how to trade dollars for Bitcoin and then trade Bitcoin for something normal, like donuts or burgers. This made Bitcoin become more mainstream and easier to buy through relatively secure exchanges like Coinbase. BTC's rate of growth has been impressive, even though Bitcoin today is around $36,000, because that's still considered a dramatic rise from its price to $8,400 this time 2 years ago. We'll just have to face the reality that the price can't keep going up at this rate forever. The market will eventually figure out the value of crypto and incorporate that information into a high level of price for those assets, and the expected rates of return may be or will be normal. By investing in Bitcoin now, you're expecting that speculatively investing here hasn't diminished, and you'll be able to once again sell it later on for much more than you paid. As attractive as that statement sounds, keep in mind that that is never going to be easy to achieve. That's all for this video. If you learned anything from our videos or have any crypto-related topic that you want us to cover, feel free to comment below. Don't forget to hit like, subscribe, and notify to get more updates from our channel and become more intelligent about the crypto world. See you in our next video!